Transition on my end. Refresh it. All right, I'm buffering, but it looks like it's going live. Give us a second where we see the video and audio. We've got folks that are listening in the waiting room. Appreciate you joining us. We're getting things queued up here. Oh, we got Hilton you're on camera, right? So we are good to go. All right, guys. Well, hey, thanks everybody for joining. You're actually here for the very first episode ever of Self-Funded with Spencer Live. We are from the Benefits Pro Conference Expo in Austin, Texas. And obviously, you see the background here with Hilton, and we'll introduce Hilton in just a second. I'm here in conjunction with WellNet and really appreciate all the work that Megan and Keith and their team did to get this thing set up. So we'll give it about another minute or so, just chit-chat, and I'll introduce Hilton, and we'll get this thing kicked off. For those of you that have actually experienced the Self-Funded with Spencer podcast in the past, this still will be recorded. I will release this as a regular episode here in the next couple weeks, but really excited about having the opportunity to bring this thing live to everyone here from Austin. All right. All right, Hilton. So Hilton, sure, without further ado, you are the CFO with Consolidated Credit. How are you, sir?
I'm doing great. Very happy to be here, Spencer.
Happy. I'm sorry you have to be the big guinea pig for this, but I think it's going to be a lot of fun, man. I like the idea of adding the live element to this, but so I know you probably haven't seen an episode before, but we're going to go into about a 30 or so minute discussion on your experience as a CFO, your journey into self-funding, what you've learned, maybe the experience prior to being a CFO, prior to going self-funding. I want to hear your story to a degree, and then we're going to talk about obviously the experience with WellNet and some of the solutions that they brought to the table as well. But before we go into all that, Hilton, who are you, sir? And give me some of your background.
So Hilton Schurz, for the last 20 years, I've been the CFO of Consolidated Credit. I've been a CFO for more years than I'd care to remember. As you can hear from the horse accent, grew up in Africa, came to the US many years ago, say CPA by profession, love being on the business side. Would like to believe that I'm very quick to adopt to new things.
Sure.
And what we found is I've always been the CFO that's actively involved in the insurance. You know, some companies you have HR more. I've always been the one for, last 30 plus years handling the health insurance.
By design, did you always want to do that? Are you a tinkerer? Did you like to get your hands a little bit dirty?
A mixture of both. I think the one thing whether most people don't like it is it's a significant expense.
Sure. And
I think as a CFO, it's always that big number on your financials. And I've also, in most of my roles, I've been involved with HR. So I've worn two hats, and it just seemed like a logical extension to me that you get involved on the health insurance and then also work out the financial aspect of it.
Yeah, it makes sense, right? I think sometimes people get really siloed, right? And I just do the finances. I'm really worried about the budget. But like you said, if this line items, maybe it's not your second or third, it's your fifth or sixth line item, it's still a significant portion of your business. If you don't really dig in, try to figure out what's driving these costs, right? You're going to be in the passenger seat for the entire time trying to counteract measures that you really don't even know what's going on.
Correct.
Right? So,
and I've also been very operational. So it was just a logical extension for me. When some CFOs are very financial. I did financial and operational because I think that you cross over in so many ways. And this affects everything that you do. As we're seeing now in the current days, it's even more important than it ever has been.
Yeah, absolutely.
Trying to attract employees.
Well, yeah, and I want to talk to you about kind of the strategy around retention and attraction, recruitment, right, of new employees. But I think every journey, as we go into the self-funded journey and in your personal experience, I really want to hear everything about it, right? But I want to set the stage prior to being self-funded, right? Because everybody has some sort of motivation to explore this mechanism. What was yours?
Okay, so in the last 20 years, my health insurance has been up and down. We've had a few good years, unfortunately more bad years.
Okay.
And what just happened, and it was all traditional insurance, and once a year, I panicked when that health insurance renewal came. It's just like this, not in your stomach, because you know what's coming. It's not good. The carrier has told you over the whole year how bad your claims ratio is.
Sure.
They're really quick. When it's not that bad, they don't come and tell you that much. But when it's bad, they let you know. And we had a few good years, but more bad years than that. And it was just this horrible cycle of how to balance things.
Mhm.
So what did we do? We went in two totally opposite directions. Our costs were going up and we were cutting our benefits.
Sure.
So you were getting less every year at a higher cost.
Yep.
And, initially I thought to myself, what are the options? There's really no option. I always thought we were too small to do self-insurance. So
How big is your firm?
so we have about 200 members, about 300 lives,
Okay.
and about a $2 million premium.
So even at that kind of 200 live realm, you still were kind of fearful that maybe you were a little too small to do it?
You know what? Just lack of knowledge. Honestly,
Mhm.
with hindsight, lack of knowledge. And also, it doesn't seem like it was being pushed that much. It was just, this is what you did. There was traditional insurance, take it or leave it. You went from one carrier to another carrier. That's how you got your premium down, and you reduce benefits.
Well, that's you say the traditional insurance, right? Those really are the levers that you can pull, is either change your carrier altogether, or like you said, start stripping out the benefits.
Yep.
None of those things really positively impact the membership, right? You're really just doing everything you can to put your finger in the whole bottom of the boat, right?
Yep.
As the ship is sinking. So did it get so painful at one point that you said, you know what, I've got to do something different? Or did you have the idea presented to you?
So about 3 years ago, my CEO said to me, I don't care what you do. I'm done. I'm done. Fix this up.
Mhm.
And I have an interesting story about brokers. I met someone 30 plus years ago, a broker, who has done only great things for me. And as I've moved and gone to different companies, I've tried to bring him in. Sometimes it worked, other times it didn't. He actually was my broker of record for a number of years. And then for political reasons, he lost the account and somebody else came in. But as a really good broker, a really good friend, he was always kept in touch. And one, it was a relationship like that. And also, when I had renewals and I was struggling, I could call him. He knew he wouldn't get the business, but I could bounce. What can I do? Are there any better carriers? So I had like a reference source to go to, a bouncing board. And then about 3 years ago, a carrier came in and the renewal was just astronomical. And I'd been speaking to
How bad was it, just out of curiosity?
It was about 18-20%.
Okay.
But for a company that's not that huge, you're talking $300,000-$400,000.
Correct,
That's a lot of money.
Yeah.
And where the next thing is reduce it. So you have to reduce it by reducing the benefits, just going nowhere quickly.
Yep.
So I always kept in touch with this old broker. And when this happened, and over the last couple of years, he started mentioning it to me. Hilton, you're getting to the stage where you can go to self-insurance.
Yeah.
And I'm saying, stop. I'm not there yet. I'm not there. I'm too small. I'm too small.
Was it a scary word just because you feared like the size, you weren't prepared for it, or maybe just fear of the unknown? Why was there a little pushback from your perspective?
I think the fear of the unknown, I think a couple of things. One, I thought we were too small.
Mhm.
Two, didn't really understand how bad the risk. I knew there was risk involved, but didn't understand. I knew about stop loss, but I didn't know how you could mitigate the loss.
Yeah.
And to be personally honest, it's more work on a CFO HR department. If you go to self-insurance, it is more work. If you're gonna do it properly, you have to work it.
Mm-hmm.
You can't just do it like traditional insurance, where you renew it once, you get your new rate, and done.
And then cross your fingers till next year.
That's right.
Renewal.
If you're gonna do it, you really have to work it. So I think that was it. So a couple of years ago, we got our renewal, and I actually said to the existing broker, "Can you give me a self-insurance?" And he tried to turn me off it, but he got me a quote from the same carrier who was our traditional
Naturally.
insurance.
Yeah.
And surprisingly so, the quote was much more. So I called the prior broker and I said, "This is what I got." And he said, "Can I have a crack at it? Can I have a crack?" And I went to the company and I said, "You've told me to fix this up. Can I get him to quote, not traditional, we don't want to change it on, can I get him to do it?" And he came in with a quote, and that's where we started this journey. And
so what he brought to you, was it not only probably just competitive, right? Financially, it was probably enticing, but was it, a new strategy that you hadn't heard about, or what did kind of the little bit of the moving parts that he presented?
We all think we know what self-insurance is. So, we knew what it was, but he actually broke it down for me, showed me how you mitigate the risk, the whole calculation of what's your estimated claim, what's your maximum, what's your true risk, did the education.
Yeah, that's important.
And I think that is the key. You cannot do this in a silo, in isolation. I can be the advocate in my company to push it through, but I need to have someone that's pushing me and that I can rely on, because there's a lot I don't know. And if I'm going to be successful, I have to have someone successful behind me.
Well, that's it, right? That's the role of a true consultant, is to steer the strategy in their particular niche, right? You hire somebody because it's too difficult for you to ultimately know everything that you need to know, because your responsibilities are vast as a CFO. So you partner with a good consultant, brings new ideas, obviously brings competitive ideas to the table. But when your CEO challenged you and said, fix it, you presented this idea. Was it initial? Were they receptive to making a change like this? And it's like, whoa, that's not what I meant when I said fix it. Yeah, tell me about some of the other C-suite perspectives when you presented this idea.
So, I think we were a good candidate.
You do?
To
Okay.
do this.
Okay.
So I think because we were, again, this is just same story year after year. We were hurt and we were hurting. Mm-hmm. So I think we were an ideal candidate. So I went and I started and I raised it. The initial thing is, aren't we too small? I said, let me explain it. Let me run it up to you and explain where it's going. Can I at least get the proposal, understand it, and bring it through? And I think, they were receptive, and you have to get everybody involved.
Yeah.
You cannot ramrod this through the organization. I think you need, and who's everybody? I think you need CEO, CFO, HR. Those are the three you need. I think also it's not bad to get some input from other senior execs. So you're building a support structure to back you.
Absolutely.
Because it is a little scary. It's new, and the one thing that's, when you're a CFO, everybody can tell you how easy and how good it is. You're the guy that's going to get it in the neck when it goes wrong.
Right. That's what I said, right? It's a little CYA, right? It's like I come get sign off from a couple other people. Like, hey, I want to make sure you're endorsing this.
This is the greatest thing since sliced bread.
Because either I get all the credit or I get all the punishment if things go wrong, unless you have that sort of a team behind you. So demographically, it sounds like it made sense. Your size, your company culture. Was this also a cultural fit to explore this type of solution?
Yes, it was, and I'll tell you why. One, because culturally, we had always been hurting, so we were ripe to go in that direction. Also, we are a risk taker. We are happy to take a certain amount of risk.
Okay.
So, and again, I think self-insurance has a risk component. So I think absolutely we were prepared to do that. The other thing, we were financially okay. And what do I mean by that? I think there's always a risk of self-insurance that in your first year, you could hit the worst scenario.
Sure.
And that's
what most people presume. That is the fear, right? Is like everything's going to go wrong simultaneously after I make this decision, right?
So I think if you are really struggling financially and have to watch every penny, you might pay more for traditional insurance, but you know what you've got.
Yeah.
There's no hidden surprises. So we had the resources to do that. We were hurting. We didn't mind being a risk. And also, we were quite a smallish company, and we can make a decision very quick. We didn't have to run this up, a huge corporate structure.
Sure.
We could sit and do it, and I think, and also had the right broker who came in and explained it and helped. We also got the right TPA in WellNet, and I think they came in. I think quite soon after started talking, we built a relationship. And I think that's what you got to accept. This is unlike every other traditional insurance. I think this is a long-term relationship, because, brokers will tell you if you don't like it, you can jump back. Personally, I think that's going to be the hardest thing in the world to do, because you've got run out, you're going to have new premiums. I think once you go in this direction.
Even once you go in this direction, I agree with you. It is a long-term commitment. It's also knowing what you know, right? Like as long as you don't have this knee-jerk reaction to a bad claims year, which everybody says maybe that's about every 5 years, and bad is relative. That's subjective, right? But as long as you know what you know now, it's like, how do you even go back? Even if you do have a bad year, well, what if you go back to fully insured? Well, I'm not going to get any claims anymore. I'm not going to know what's actually driving my claims. I'm not going to have any choice. I can't pre-select vendors and maybe pick and choose which ones I'm going to plug in.
Right.
So it's like once you go in this journey, it is a leap of faith, but it's a long-term
It's
plan,
long
right.
term, and if you work at, like I say, you have to work at and educate yourself. I want to use a term which is perceived risk.
Perceived risk,
Absolutely,
okay.
there was risk, but now I've changed that from risk to perceived risk. And what do I mean by that? When I go traditional insurance, that's it. I find out a year later what's happening. So when you go into self-insurance, you've got this risk that you're going to have to, if it's a bad year, you're going to have to cover it. But if you're working it every quarter or regularly, you can actually mitigate that risk. If you see where your claims are coming, what's killing you, what's the corrective action?
Yeah.
So you really, you know what? The one thing I always felt before we did this, I had no control. I was just the punching bag. This is what it is. Take it or leave it. Yeah, you can get a few points off the quote when you go back and you.
Yeah,
and
like,
you do
I
that.
really showed that carrier. I got him to come down by 3%.
But
Like, and we
3%.
won. Yeah,
but,
yeah.
But here you can really, you have control, and you can really work it to try and make it work. And I think that's so. The risk that is there, we shouldn't not say it's there, but I think you can absolutely mitigate the risk, and you can work to fix it up.
Well, that's why it's called risk management. At the end of
Yep.
the day, this is just a mechanism in which to manage the risk itself, right? So like you said, there's a little more administrative work, but that's why you work with good partners that know how to execute on that, know how to pull the levers and grab money and then we'll shift it over and, file claim. I mean, there's all those moving parts that when you partner with good vendors
Yes.
that have that experience, they know what to do. In a
Actually,
circumstance
change it from vendors to partners. I
Yeah.
think you have to
Partners,
accept
for sure.
that you have got partners in this, because you're all in it together. And if they're good partners, they're going to support you and work with you to get to the desired results.
Well, that's why I'm a big fan of just the term, you can't manage what you can't measure. And until you're able to measure these things,
Yes.
and that's where I think coming back to the dynamic between you and your advisor, right? So the advisor that brought this to the table, how many years ago was it when you made this transition?
This is, we're now into 3 years.
3 years. Okay. So do you find that there's a more of an ongoing conversation that maybe was had in the past? Because as you're seeing these things arise, you start going, well, what are we going to do 6 months from now to mitigate that? Or how are we going to address that particular prescription spend? Are you having more regular conversations with your consultant about the strategy itself?
100%,
Yeah.
because we're working it on a real-time basis. I would meet this broker, regular times over there, but it was more social, just to keep in touch, because he knew what was coming in 8 months or
Yeah.
5 months. Whereas now, when we get together, we're actually working in the system. And I would love to say it'd be great to have one day where we say, oh, that's great, nothing to worry about.
Yeah.
We haven't got there yet. We're still worrying about the level of claims, but at least he is more involved. And I think from the company and from the broker, it needs way more involvement than under a traditional.
Well, and I think that sometimes, you talk about that traditional sort of legacy broker, the outdated model, whatever you want to call it. And I don't want to disparage them, but there was that mindset is like, oh, I'll just come back at renewal. We'll do some social stuff. Now there is a little bit more active involvement from their perspective to keep you apprised of what's going on, right? And some brokers are averse to that because, I don't want to tell my client to go self-funded because it's a little more work for me. Selfishly, me as the agent or the consultant, now I got to do more work. And so maybe there's less commission, maybe it's more work. There's a lot of perverse disincentives to have a broker transition you from fully insured to self-funded. But when you get the good ones, like it sounds like you've got now, their incentives are aligned with your incentives, and positive impact and outcome for you is good for them. It's going to further entrench you in that relationship because you actually had a problem solved for you or solved with you rather than just shopping your
Absolutely.
insurance. Yeah.
But also, I think, the horse is out the barn. This is not going away.
Yeah.
Anyone that I can talk to and tell them how good self-insurance was for me, if somebody called and asked me, is it worth trying?
Yeah.
Absolutely. You got to look at it because I think whatever the model or the hybrid, things are changing. Only thing constant is nothing's going to stay the same. We are going to see change. And I think, to brokers out there, I think this has to be one of the tools in your toolkit.
Mm-hmm.
If you're dealing with companies that are of that size. If it's a 10-man company, this isn't one of the options. But I think as companies are reaching that thing, you got to have this as a tool because more and more people are hearing about it.
more and more conferences are built around this notion as well, which I think is, like you said, the cat's kind of out of the bag.
Yeah.
And that this is not going away, right? The market is adapting to it. And I think I felt it accelerate in the last couple of years, whether COVID helped with that or whether it was always coming. I felt an acceleration down this path. But I do want to talk about, because we got your perspective as a CFO, and I really appreciate this sort of objective look about your business, but the employees, right? We got to not forget about the employees that are impacted by this decision. So were they even aware? Did they know? Has it been positive, or are they sort of unaware that this even happened?
Okay, so it's interesting when you're in my role. Not only are you the person who makes a decision, but you're also a consumer.
Sure.
So you wear two hats, and so it's like whatever you do, is going to affect you personally. So my philosophy was this: make it as simple as possible. Don't rock the boat. So what do I mean by that? I didn't change benefits and I didn't change cost. Mm-hmm. I kept them the same. And in fact, in our company, when you came back and said, good news, no health insurance increases, people breathed a sigh of relief.
Yeah.
So you were already on the right,
they were bracing
you were going
themselves,
in the right direction.
Yeah.
So I did a couple of things. One, I kept things wherever I could the same, so there was no change. The only thing that happened, the insurer behind it changed. We went to Cigna.
Okay.
So to the rank and file, we had changed from this insurer to Cigna.
Yeah.
I didn't publicize self-insurance because I think really, I don't know what it does for them other than it could have some negatives. People might say, you know what? Oh, you're self-insurance. You can do whatever you want. Why won't you do this? Why can't I have the surgery? So we just wanted to be as seamless and just didn't want any major change. My thought was, let's get it started, get an as easy a transition so we get over that hump.
Yeah.
And then look at ways, because we know we're going to hit bumps along the way. There can be huge claims. And by the way, we did this as COVID started.
Yeah.
So with hindsight, when I think back now, what were we thinking?
Yep.
So we actually did it in the worst time, and I think we're doing okay.
I think, yeah. And especially if you're able to do, I mean, sometimes a catalyst like that is necessary, right? And whether it gets so painful that you feel you have to move, or just maybe the timing was right in the marketplace. I mean, nobody knew what was going to happen there, but did you guys benefit a little bit from a reduced frequency in claims during early COVID?
So we've got a bit of that, but we did have a couple of really bad COVID claims. But one of the other things that I did that, because it's not just the employees, it's how the corporation works with this. Because if you think about what self-insurance is, only pay as it happens. So what happens if you have a couple of really bad weeks? Now you've got to scramble for cash. So I even took it to when I said I try to keep things as simple as possible, I imputed a premium. I took what our premiums had been before we went to self-insurance, for single, married with spouse, married with children, and I applied that. And I had all of the entities that paid fund the premium monthly.
Yep.
So from a cash flow standpoint, nothing changed. The only difference was the money was going to us. And when we got the claims, we had enough funds to keep paying it. So it wasn't like, oh my God, we've got a big cash call. Where are we? Do we have enough to do it? So I really tried to make it be as seamless and as simple as it could be.
Well, you essentially did what level funding does as a product. I don't know if you're familiar with that terminology, but it's like just levelly fund the premium in the good months and the bad months, and you smooth out the risk, the experience itself, but you've now allocated the dollars for in that month where you do have that cash call, you've got the money setting aside, right? So you're calling that imputed premium is the terminology you're using? Yeah. And it makes a lot of sense.
It is like level.
It is kind of like, but so what you've done though is service yourself in the future, right? So then rather than this panic of, oh my God, we have this big cash call, I've got it set aside. I'm comfortable now because I did kind of the right thing on the front end. Even when you transition to self-funded early on, right? You've got a little bit of lag in claims, so you can build up reserves.
People don't realize that. Yeah. You have a lag in claims. So you really, in the beginning, you are able to build up a reserve. And I think that's the key. You don't want to ever have it where you're scrambling, because these claims got to be paid. And the last thing you want to do is bounce a claim.
Yep.
So I think that helped. But if I just again, to react the point, I think as the simplest you can make it, that's what you should do. I didn't consider dropping premiums because I had no clue where it was going to go. And remember, I'm still struggling because I know I have a risk component. Yep. So I think in these days when employees has no increase in premiums, no change in benefits, Phew, that's,
There's a sigh of
that's
relief, right?
Sigh of relief.
Yeah.
So already it was there,
And are you incentivizing or educating the your population to make better choices, right? Are there certain incentives built into the plan that encourage them to go to maybe a higher quality provider or a lower cost provider? Are you doing any steerage at all?
So yes. So through the TPA, they have this concierge service. And what's the concierge service? Where they've been able to structure deals with certain doctors where the costs, are lower. And we've all heard the stories of like hip replacements and that, where the variety, the variation in cost can be significant. So we started very slowly. If you did use the concierge, you would get some rebate on your deductible. We'd eat some of your deductible. So we did that. That was one of the first things. We haven't gone crazy doing that, and I'm actually changing my concept on that, because I think initially I looked at what as being a cost savings. I think now is even a better way to do that, and that they have doctors of excellence that they have pushed. So by having a doctor of excellence, the average person, and I think also a socioeconomic level. In the call center, they look in the zip code, find a doctor, and go.
Yep.
The higher up you are, you have your relationships with your doctors. I have my knee surgery, done 6 surgeries on my knee. I'm not going anywhere else. But a lot of people are just going to someone because he's close.
Yeah.
So if I can now call and maybe they can make an appointment or they can do that, it adds a little. It's a helping hand, and I can save money.
Well, it's the outcome that was supposedly going to happen with consumer-based healthcare and HSAs. And, we empower the consumer to make better choices because some of their dollars are at risk. And, obviously there's tax advantages to that if they use it correctly. But it didn't have the outcome that was intended, or maybe it was the outcome was intended, but by the people that actually set up these plans. And that's a different story. But now you're talking about actually empowering the members with actual choice and being able to visibly see the impact
Choice
of those choices.
and dollars in their pocket.
Dollars in their pockets.
The other thing that we did quite soon, one of the biggest concerns we've had over the last 20 years has been the high cost of the pharmacy.
Okay.
And that was 50+% of our total claims. Year in, year out, just never changed.
Yep.
So we did the thing then. We realized where we were going, and we said, you know what? No more specialty medicines. People panic, stop. This is what we're going to do for you. The first month you get the prescription, we'll pay for it.
Okay.
Then you call us, and the TPA WellNet is going to work with you to see if there's a manufacturer rebate, if we can source it overseas, where else can we source it at a lower cost, but you need to work with us. If you don't work with us, it's not going to happen. But they will do it for you. They might need some information, but they will hold you the whole way through, and they will be, the person fighting for you. And in the end, if we cannot do it, we'll pay.
Still cover. Yeah, that's just all you're asking them is to participate in the savings or to participate in the sourcing or the solution, right? It's like, we'll cover it. Then we want you to get involved. And if you can't get it covered, we're still going to cover it. But let's see if we can solve this problem in a way that benefits everybody, right? Because if you got a medication that's costing 6 figures a year annually for one person, that's a noticeable impact if you can alter that by 50% or 30%, right?
Take a practical example. An $18,000 a month med. Say you source it for $9 or $10. You just saved $100,000 on a $2 million premium.
Yeah.
Do that a couple of times. That's what's happened.
Yeah.
So
there's your trend right there.
You haven't cut the benefit, but you've been able to keep the cost. And to the employee, why would I do this? Because it's going to keep your premiums low.
Yeah.
And in the future, if we do this, if you're involved in this, we are going to work in the right direction, keep our premiums down, and everybody benefits.
Right? And it's not a very painful process for them. It's just a little bit of involvement, little incentives. Yeah.
So some people are so good at it, they jump in, and others don't. So the others that don't use the stick. No.
Yeah. Every once in a while,
it's amazing how they run back and
every once in a while you got to use a little more force and not coercion, but obviously a little bit different incentives that run. So what I want to do here in just a moment, we're going to obviously bring our special guest on the podcast. We're going to have somebody else sitting in the seat besides Hilton, Mr. Keith Lemur, CEO of WellNet. Keith, we'll grab you here in just a second, get you mic'd up. But one more question I have for Hilton before you jump on, and then I want to have you maybe hop in and weigh in on what you've heard so far today. But Hilton, what about kind of challenges? Every once in a while, like I don't ever want to paint a picture of this is the rosiest scenario and everybody does it, it's going to go perfect. My own business, I have to paint the picture of sometimes things that don't go as well as expected. So in your experience, was there anything that you had to solve for, or maybe wasn't initially as smooth as it is today?
So, maybe we've just been blessed. It was actually a fairly nice transition.
Yeah.
Some of the things we had, we tried the concierge. It didn't work that great in the beginning.
Well, you're setting up a new model, right? You're setting up, obviously, and how it works. You got to educate people on a little bit of here's what to do in this circumstance. I mean, those are things that are almost like housekeeping items to a degree.
And that was one, but I'm going to tell you, I'm going to give you a good side. I have the phone number of the CEO. When there's a customer service issue, I can call him or text him 24 hours a day. I can't do that to Cigna when I was with the Aetna or these others. I didn't have that. So it's quite funny. One of the things you always think is, I actually feel maybe I have more power, small little me now, because I'm dealing with someone who's my partner, truly, not just this huge insurance company out there that I have no connection with. I can make the call. Can they fix it? Can they not fix it? But at least I can have it. If an employee comes to me and says they have a problem, and that's the key. I think when you make this change, employees aren't stupid. They get to know that something's changed. If there is an issue, like maybe we had with a few customer service issues on that, you need to nip it in the bud there and then.
Well, that's what the staff is there. That's why I've been more conscientious in my own business as well. Of occasionally, this is how we work through this particular problem, or maybe you have this particular objection, and here's what we solve for. It's like if you present your business as a perfect business, well, what you're doing is setting people up for over-promising them. Correct, right? So it's having the partner that's all right. We figure out this is an issue. Let me get on top of that right away. Like it's solving problems together. And I think that actually just really suggests, like you said, that there's actually a true partnership. Yeah. There's a want to be there and you're just not a number in our portfolio of clients. So Keith, are you all mic'd up? We got him.
Give you just one more quick thing.
Yeah, please.
That's a little different. So what happens now, sometimes the employees go to the doctor and there's a little disconnect between, is it Cigna or is it the TPA? And there's a few issues like that, but they're all surmountable.
Yeah, everything is solvable.
Because before you went, it was a one-stop. You literally went to say Cigna, and everything flowed through them. Here, there's two parties to the transaction, but all easy to fix. And really, I think those are
There's your partner in crime coming on in right now, Keith. Hey, glad to have you, man. How are you?
Hilton, you've been doing a terrific job. I'm excellent. Thank you for having me, Spencer.
Well, so I want to curious your perspective. You're obviously sitting in here in the background and got a chance to hear firsthand perspective from Hilton. So give me some commentary real quick of things that just stood out for you in this conversation.
I have to tell you, when you have a client like Hilton, who's a CFO, who's actively engaged, it's a dream customer. It's somebody who is taking the time, who wants the visibility, who wants the predictability. And it's a pleasure to hear how successful he's been as a company and also what it's done for his people.
Yeah, and absolutely right. As what you guys have built, you of course want it to go well, but sometimes you hear perspectives of like, here's what actually the impact of my business, right? Or here's some of the things we work through. But just knowing that everybody's kind of rowing in the same direction, right? And we're going to solve these things together. But having solutions like Hilton obviously implemented help solve a business problem. It's a financial problem at the end of the day, and you guys help them do that.
There's no doubt. Listen, health insurance is an unaffordable mess, and at the same time, with healthcare, with your people, right, your most important asset. Right now, you're dealing with workforce development, culture, work from home, the great resignation, cash preservation, expense reduction. At the end of the day, there's always going to be issues with health insurance, whether you're with a large health insurance company or a boutique player. But what's really important, what I think I heard from Hilton, is it's about being resolution specialists, right? It's finding out proactively where are the challenges, what you can do going forward to mitigate those issues. And as we like to say, what I think we're very good at is we like to control the cost of the claim before it gets paid. Because when you're in a full fully insured environment, you don't have that flexibility. When you're in a self-insured environment with a large carrier, it's a status, quo type of plan. It's claim in, claim out. What's really nice about partnering with Hilton is that he's now implemented a bespoke health insurance plan that works for him. And every company, right, goes at their own pace to save.
Absolutely right. Yeah, I think the crawl, walk, run nomenclature, I've heard Megan say quite a bit, and I know that's part of your strategy, right? It's you meet them where you're at. Hilton obviously had the experience that he had prior to doing this, right? But it doesn't mean you have to rip the Band-Aid off and go all the way in one fell swoop, right? It can be an incremental process. So Hilton, I want to talk to you and maybe get Keith's perspective, right? That first step, right? And then maybe we tinker in year two. Give me an idea of maybe some of the things that you discovered after being self-funded that you were able to now walk a little bit further than you did the year prior.
So as I said, I think the biggest issue was the meds and working on the meds. Between that and now if we use the concierge, I think we will really get our plan into such a nice situation. I don't want to go too fast.
Sure.
Before I came onto self-funded, someone took me to reference-based pricing.
Yeah.
And with hindsight,
like, whoa.
and by the way, to our company, that seemed like fantastic because the way they sold it, man, you're going to pay this much of any claim. So thank goodness we didn't go there. I don't know if that's one day on the horizon.
Sure.
But you know what? I think between what we're doing now and tweaking certain costs, and if we can go to providers that give us preferential rates, I think that's going to give us so much, for us that we can keep the costs down.
Yeah.
We haven't gone crazy on health, on education and that. I think people always talk about education. In the end, people worry about money and is my claim being paid?
Yep.
And I think you can try, we've tried, we're doing teledoc and COVID helped a bit with that. I think that, the next thing is just to keep watching where the claims are going and fine tuning it. My business with hindsight now is, we are big credit accounts, so we do a lot of looking for clients. We analyze everything, man. We analyze. But here's a big expense that no one even looks at.
Yeah, absolutely.
The only thing is it an invoice? Did you pay an invoice?
Exactly. To elaborate on what Hilton mentioned
Yeah.
before, when you have the ability to take a Humira drug, which costs $60,000 a year, and international source it for half the expense, or
Sure.
take a knee surgery that's $80,000 and get it for $20,000 and waive the deductible, for the employee, you're now putting real money in the employee's pocket and down to the bottom line of the company. And now Hilton and the team at his organization, they have the ability to, all right, do I want to improve programs? Do I want to lower premium contributions? Do I want to give premium holidays?
Sure.
These are all decisions that executives like Hilton are now able to make because they're now finally controlling their third or fourth biggest expense.
Absolutely, Keith. And so talk to me about some of the, you sit in the seat that you do and you solve problems, right? But you work with companies to provide some assurance to a degree, like when you make this transition, we got you. We're going to help you. But what are some of the things that I think commonly an employer in Hilton's shoes a couple of years ago, some of the things that you hear are common objections or fears that they have in transitioning to self-funding?
Yeah, the biggest objection that we typically hear, Spencer, is change, right? Inertia, right? The large carriers have always done it, right? So they must be able to do it well. But yet now, given the inflation, right, and the cost of premium increases, that doesn't cut it any longer. And so when you take the time and really sit down with the broker consultant, with the executive of the company and say, listen, we're sitting around the table. This is a partnership, right? Mm-hmm. We can go in and we can provide understanding about what's driving the cost. One thing we did with Hilton before we took them over is we took all their claims data, 2 years of claims history, or shall I say as much as we can get our hands on, and actually show where the areas of opportunity were. As an example, right? Maybe there's members that we could move to the Medicare plan and move them off of a group healthcare plan. Maybe we could do some carve out ESRD network as an example. Maybe we can get a bundled contract service for a lower cost procedure. All of these items, right? You never have that ability to do it because you don't get that kind of data that you need to make the informed decision.
Yeah, there's not visibility. I mean, whenever I do like a self-funded 101 presentation, I always hammer access to the claims data is one of the biggest motivators, in my perspective, of why an employer would self-fund. Cost usually is the top driver, but then underneath that, well, what am I getting in terms of claims? How do I identify, like you're talking about Humira is a good example, ESRD is a good example, preemies, we had a conversation off camera a while ago, like all these things. How do I identify the cost drivers? Well, if I'm getting a pre-canned report every couple months or once a year that says, here's your high level claim spend, there's no detail to it, what are you going to do with that, right? Hilton, was it an eye-opening moment almost for you, the level of detail of claims that you got once you transitioned to self-funded?
Well, remember, every week you see what's happening because you're paying the claims, and then at regular intervals you're doing the whole analysis. So absolutely, because up until then, really, it was a once a year you got a report that just told you history.
Yeah.
History was great. All that history did is help increase my premium for the next year. They use history the correct way. It worked for them. So I think, and the broker that brought us into self-insurance, that was one of the things he had from day one, that you're going to be the master of your own. You're going to know so much information. You're going to be shocked how much you know and how much you can do with that. So,
well, that's also good having partners that help you parse that data.
Yes.
Like it's one thing to get the data, it's another thing to be able to actually make sense of it and put it into motion. So Keith, I want to ask your perspective. Obviously, Hilton's business was the right profile, but in your experience and kind of some of your sweet spot, right? Are you getting a little bit smaller employers transition? Maybe what sort of demographic makeups of employers, industries? Like what's a good case scenario to transition off fully insured?
So WellNet's been around about 25 years, and when we started out, the average size customer was about 80 employees or so. At the end of this year, our average size customer will be about 250 employees.
Okay.
The common thread of our customer, it's entrepreneurs just like Hilton and his team. And so we're working with executives that are managing every aspect of their business, but they're not doing it for their health insurance. And so these are not where you have decision by committee to, go in and talk about a health insurance plan. These are entrepreneurs that are car dealers, technologists, professional services that want to be able to go in and improve the quality of the healthcare, but lower the cost at the same time. And so these are folks like Hilton that want to dig in and understand. But in order to do that, you need a partner who's going to actually teach you. And so having been around 25 years, right, we've learned how everybody around the table, right, the carriers, the network access fees, the pharmacy managers, how they make money. And when you figure out how people make money, you can then dissect that and then remove those revenue streams and give them back to your customers.
I like that.
And that's what we've been able to do.
I like that. Yeah. Figuring out how they're making money. Where are the things that are less visible or the indirect compensation that's maybe built into the equation that gets exposed? But hey, Hilton, I want to ask you, knowing what you know now, what did you wish you knew 3 years ago? Would you have done this earlier? Like, talk to me about hindsight.
Hindsight is great.
Yeah.
Absolutely. I think 3 years ago, I wish I'd been educated in this. I wish I'd understood what health self-insurance was. I wish I'd understood the risk and how I could accomplish my goals. And I think if I had known that, absolutely. Oh, and also one of the biggest things I did learn is size matters, but it doesn't have to be that big. There is this perception, that you have to be 500 or 500 employees or greater.
Yeah.
So I think, had I known that, and maybe even if I had, I think everything comes in its turn. You have to be right. If you're in the right position when you make this, I think you got nowhere else but going forward. I think if maybe you're not 100% right and you do it, I think it'll still go great. But I think it's great. I think we did this when we were absolutely prime to go in this direction.
It's interesting, right? Every company has their own culture, their own pace, their own desire to save. And so what works for Hilton may not work for a law firm, may not work for a transportation company. And so when you have that ability to kind of move down your own pace and, whether it's implementing mirroring PPO contracts or maybe implementing direct contracting or maybe going reference-based pricing, you're doing these things based on your culture and your cost profile. And that's what Hilton has been able to do. And so he picks up the phone to our team and he challenges challenges us, right? He wants recommendations, right? How can I save? I need $200,000 that I got to close the gap. What can you do, right? So we come back and we give him options, right? A, B, and C. And ultimately, at the end of the day, that's his decision versus what I understand where Hilton was before. He would get a premium increase of 18, 20% and then put it to bed for 10 months and then hope and pray he wouldn't get another increase.
Hope and pray.
That doesn't work.
Right? Yeah.
No.
Yeah. Well, and I'm curious.
Old school.
It's old school, right? And I think we're all doing our part to help spread the gospel of self-funding, right? It's not for everybody, like you said, Keith, and not everybody's scenario is exactly the same. Most often, though, the business would benefit at least exploring these options. Talk to me, though, the positive incentives from a workforce perspective or talent and recruitment, retention perspective. I know you're probably talking to business owners all the time. Going that route is maybe an alluring tactic.
I'll give you an example. While it's not Hilton, maybe we can get them there next year. I got a call from a CEO car dealer recently. They've been with us now 3 years. They have saved so much money with WellNet being an independent TPA that they now have waived their premium contributions for their employees for 3 months. And this is the second year in a row they've done that. Wow. That's almost $3,200 over that 3 months in savings. That is meaningful for those families. So think of what that does for the employee recruitment as well as retention. And just the messaging overall in the community.
Yeah, absolutely. I mean, that does. I remember premium holidays. I know I was working for a broker internally, right? And that was a shocking thing to me to even consider that employee. Wait, over the course of December, I wouldn't have to pay my premium. It's almost like it's found money, right? Because they thought, well, this is a way to get back to the employees. If we had a great claims year, maybe they were doing what they were supposed to do from a personal perspective, and whether, Hilton ultimately gets there, he's got that bank account that he's got to manage, and we'll see if that's the case. But a couple of minutes and we'll close up, fellas. I really appreciate you both joining me. I love being able to do this live. Thank you to Megan Chiarello. She's off camera. I wouldn't have happened without her and with Nathan running point here. But closing thoughts, guys, right? We've talked for about 45, 46 minutes so far. We've got some people that were tuned in live. I want to hear both of your perspectives. Hilton, I'll start with you. You've been in the hot seat the most. Kind of closing thoughts about this experience for you and where you think you're going to be going the next few years as well.
So how do you measure success? I think, one, my employees are happy. They're not unhappy. I think better than it's been with previous insurance. So I have employee happiness. I haven't had a premium increase in 3 years.
It's amazing.
And I'm very close to covering my corridor exposure, which to me is call it whatever it is, this that I've totally mitigated my risk. And I think our scenario, it has worked.
Okay.
I think it can work for most people. We were lucky we didn't have a bad year in the first year we started, and we had huge claims. The stop loss kicked in. Mm-hmm. But I think if you feel that it's time to explore it, you absolutely should look at this because it's such a viable option. And I think it's just going to keep rolling and rolling. It's going to become more, I believe, the norm. Well,
my hope is we get it there with it is the norm. I mean, the percentages of employees that are covered under a self-funded plan is somewhere in the realm of 2/3 of employees in the United States. But I want to keep inching that further and further up the ladder. Keith, what about your perspective? Right, the floor is yours. So closing thoughts, last couple minutes. Love to hear from you.
I touched on this just before, but everybody talks about group benefits, employee healthcare, insurance, right? We don't look at it like that. We look at it as workforce development, culture enhancement, because this is what's going to drive business in the future, right? Is talent acquisition and how do you keep people healthy and happy? And the only way to do that, right? Health insurance, it cannot be sustainable the way it is right now. And so it is up to every CEO, every CFO to get involved, stay involved, and to challenge the status quo. Nobody ever got fired for hiring IBM, right? P.S. There are upstarts that have now taken them over. It is up to independent organizations like WellNet and others that are digging in, finding solutions, making recommendations, and then doing that on a scalable, repeatable basis, but doing it like with Hilton in a partnership manner.
Yeah, doing it in a partnership, right? I think that's really what it comes down to at the end of the day. So fellas, Hilton, Keith, absolute pleasure. Thank you guys for joining me. Thanking you for taking the leap of faith and doing this live. But at the end of the day, it was just a podcast like any other. I had some folks obviously tune in on the live show, and I want to thank those folks for joining in as well. Again, Megan, Nathan, you guys rock. I really appreciate the opportunity to do this. WellNet, PlanSite, everybody that made this possible. I really appreciate you guys and hope to do it again soon.
Spencer, thank you. Hilton, thank you.
Pleasure. Thank you guys on YouTube. All right.
We off?